Mad family and friends, it's George Samios here with the November RBA update. Unfortunately, gang, they put the rates up 0.25%. The last time that they put the rates up like this, where they were this high, was in 2013, almost a decade ago. Now, not to scare you all, but I want you to all be very informed. So the reason why they keep putting interest rates up is because our inflation in Australia is sitting at that 7.3% mark. Now, just to give you some context, the last time our inflation was that high was the late 80s. Now, for a lot of you watching this in your 20s or 30s, you would have never seen rates this high, but your parents or grandparents would have. Now, if you ask them, interest rates they would have seen was in the late teens, nearly cracked 20. Imagine how tough that would have been. So if we don't combat inflation, our rates will keep going because it's the only lever they have to calm down inflation, is to put our rates up. Okay, gang, so how will this affect you right now if you're trying to buy a house? Well, the number one thing is your borrowing capacity will probably change. Now, if you are pre-approved with the bank and you're within the 3-month period of the pre-approval, it shouldn't affect you. But if you don't buy within that 3-month pre-approval and it lapses and you have to get re-pre-approved, the assessment rate would have changed. Now, if you don't know what assessment rate is, it's the current rate plus 3%. Plus 3% is the buffer the government puts on the banks to make sure we can afford our home loans if the rates go up. AKA, guys, your borrowing power would have changed a little bit. Now, for all those with mortgages, how will this affect your repayments? So at the moment, the average variable is sitting around that mid 4% from the last month RBA update. The new variable now with the most recent RBA 0.25% increase will probably sit around that 4.74% mark. The actual impact on your monthly, weekly, fortnightly repayments will be the following. So I've done $1 million here because the average loan size has probably become this. So 0.25 on $1 million, we're looking at it at about approximately $50 a week difference or $200 per month. Now, how does variable compare to fixed? Well, the gap is becoming quite smaller. You can fix now for 1 year at 4.95 or up to 5 years for 5.85. It looks like that 2-year, and there is a 4-year deal, which looks pretty good at 5.49%. Of course, you don't have to fix your whole loan. There are splitting options. If you want to learn more about how you can fix, again, just reach out to us or call your bank or broker, and they can discuss how you fix in your mortgage and if it's right for you. Gang, as always, you've seen it here first. MAD stands for Make a Difference Daily. We're with you with the good times and the bad times. And I'm sorry if I scared you, but I'm just updating what's happening live. And sometimes it is good to be scared because now's the time you should ring up your bank or broker to see if you can get a better deal. Because I think if we can't combat inflation, these RBA will keep putting up interest rates to try and combat it and bring it down to where they want, which is around 3%. If you're new to the channel, please hit that subscribe button and turn on notifications. Otherwise, I'll see you next month for the RBA announcement for December, the last one for 2022. Thanks for watching.